Welcome to the Market Alert for Monday, the 29th of April 2019. So on Friday, not a lot happening in the pound, as I spoke about in the previous Market Alerts, but prices finding support, moving back above the 76% retracement here on the overnight. Now Friday, the market was very sideways until we got the US advanced GDP, which we'll just nip over and have a look at. So let me just wind this back, and there we go. So this came out better than forecast by 1%, and this had an impact on the dollar, and the pound moved higher, as you can see there. But all the time prior to this news, the market traded in a range. And over the weekend, our markets closed, but you can see as we've kicked back in, once again, very quiet market, waiting for Brexit news and any other news that it can get. Now, if we go back to the news, and I'll just go forward, an interesting thing this week, starting off today at 9:10, Carney is speaking, and then he's also speaking on Friday as well, Thursday, after the release of the usual interest rate info. So again, keep an eye on that. And the rest of the news, we've got the FOMC Fed funds this Wednesday. There to remain unchanged now. So going forward, as the impact of trying to increase interest rates on the market was a bit fraught, to say the least. If we just have a look at the Dow, we can see going back how the rate rises caused a bit of a problem for them from October all the way through to December. I'm going to come back to this in just a moment. But on Friday, the market trying to move high. Now, given that the fact that the GDP figures came out 1% higher than forecast, I was expecting this market to really move up a fair pace, and it didn't, and it's starting to look fairly weakish as well. So if we go from the recent high to here, watch the 26,605 level for some form of resistance. But if we get through this, then we're certainly going to see the market attack the all-time high here. And once we do, well, looking at the implied volatility, you can see that we're heading back down into the lows, and also October, where September we got down into the same levels down here, and then we had the correction all the way through to January when the Fed actually stepped in. And this morning in the Money GPS video that I look at, I was intrigued by the headline, which is down here: investors have never ignored risk at this level in history. And this is the very interesting chart here. This is the VIX futures net options speculative positions, and you'll see that we are lower now than we were in 2017 when we had another major correction. So you can see these spikes in the VIX, and basically what's been happening, as I've said many times before, is that the Federal Reserve have been using their funds in order to short the VIX futures contracts in order to keep the market up. But the position is so heavy on the downside now at record levels, and given that the volatility is so low, wherever it's gone, I must have done something here. Let me just bring this back. Given that the implied volatility is heading back to these levels as well, then we can expect to see something take place going forward as well. And also, don't forget the old mantra, selling may go away, where we could see some sort of correction once more. But the market's certainly struggling to move to the upside. Let me just bring this back. It looks fairly weakish. It's not. You think it would be driving up to these levels, especially given the 1% increase in advanced GDP. That is, of course, if it is to be believed. So Yeah, an interesting week ahead, I think, as far as these markets are concerned. Meanwhile, Bitcoin, well, it's stuck in a range after the drop on Thursday. Friday, the market a bit more activity, but Saturday and Sunday, very narrow range there. And you can see how narrow the range has been here as well when you look at this from the correction to the current bar. We're just at $69 average range over a 4-hour period, which is neither here nor there. So still very quiet for this market. Again, any sort of activity is happening outside in the Far Eastern market. But again, you can see from here to here is only $50. And if you were to measure the range of yesterday's trading, including this drop, it's a massive $9 a bar. So again, at the moment, not a lot happening in this. There is a defined, certainly a breakout in the market, as I discussed in Friday, but there's still not enough on that intraday to take advantage of the swings, although the upside certainly has a lot more potential at the moment by the looks of things. Just a nice correction down to the 76% retracement levels here. Okay, let's see what happens going forward this week. Will the Dow move higher, given the we've got Carney later this morning. We've got Carney again on Friday, and then we've got the FOMC meeting minutes on Wednesday at 7 p.m. as well. We'll see what if this can actually boost the market. And I think, if I'm right, that Parliament resume today as well after the Easter break. I might get a bit more activity in the pound as well. Let's see what's going to happen with Brexit. Okay, that will do it for this one. If there is anything to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.